JBlog, 10th of January 2010. It's a new year, new decade. Looking here at the New York Composite Index, which had been very flat for about 3 months. No action. Suddenly, beginning of the year, the market goes up. And now the story on Wall Street, the statistics on Wall Street are that if the stock market goes up for the first 5 years of the year, then the market goes up for the rest of the year. Obviously, the bulls now know this, and they're going to be trading accordingly. That's the problem with any of these statistics. As soon as everybody knows them, they no longer work. We'll see by the end of the year whether they actually do work or not work, but looking at this chart, I cannot deny that this definitely is a very bullish looking chart with a breakout in these first 5 days. Then going over to the S&P 500, I see basically a line that is very much trend following. It's straight up, especially here in the last 2.5 months. We haven't even had a pullback, not a single pullback. There was a pullback here, pullback there. There has not been a pullback in this market. Other thing I'm looking at here is the VIX. VIX has made new high and new lows 18, which means there's no fear in this market whatsoever. This market is convinced that it'll never go down again, and that means that people are taking on enormous risk without basically buying insurance. The VIX measures the premium paid on options, which are basically insurances in the stock market. Transportation going up. Utility had a bit of a dump here after having this run up, bit of a dump here with the fear that interest rates might be going up. Utilities obviously are interest rate sensitive, and an OBV potentially dipping below here for utilities. Nasdaq very strong. So that's the technical picture. The technical picture is definitely saying we are going up, and we're going up forever. We're not gonna stop going up ever. And this is the S&P 500 for the last 5 days with a 5-minute chart. Let's get this down to a 15-minute chart. There was a large increase on Friday in the last hour. For the rest of the day, the market traded pretty flat, but in the last hour, this ETF, this index went up quite strong. Again, very impressive. Bulls definitely putting on a good show. To try to invite the retail investor back into this market, get retirement funds back in this market that have not participated. Most of this increases that we have seen over the last 9 months has been institutional for the most part. So that's from a technical point of view. The problem that I have with all of this, and I just cannot get beyond this problem, is the underlying fundamentals. Now I'm going to look at the kind of news stories that I come across that tell me, here's the technical saying everything is wonderful, but here is the rest of the story. So here we have story in the Wall Street Journal talking about how more and more of the prime mortgages are falling behind, deteriorating in the third quarter, as even the most credit-worthy borrowers increasingly fell behind on their mortgages, highlighting problems. Blah blah blah. So. Another article here, New York Times, just a little while ago, basically was an editorial, and it basically said, hey, walk away from your mortgage. if you're 20% underwater, why indebt yourself the next 50 years? Walk away, start fresh. Gave justification for people to actually walk away from the mortgage. Here we have something I've been talking about, the decay and decline of commercial real estate. Rents are falling in New York City, but they are rising in DC, which is a new trend, that private spending is down but government spending is up. So that was another Wall Street Journal article. Along the same lines, we have a an article here talking about a further slide seen in commercial real estate, and it talks about how 920 football fields of office space are available in Manhattan, and how rents are dropping, which basically means that businesses are giving up space. Here we have a very interesting analysis done about a second wave of mortgage defaults coming, and this is probably the most interesting chart here. This was the subprime mess right here. These are the option arms I have been talking about. They will be defaulting. Most of them will be resetting right here. The thing is that a lot of them are underwater at this point, and they could become even more underwater if we have more people walk away from mortgages. So basically here we have another group of defaults happening, and that could happen a lot quicker. Here we have an article about an enormous amount of office space being available in Silicon Valley, the center of technology. Here we have an article that says that even though there are sales that are happening, real estate brokers are simply not making a lot of money on them, which means that most of them are foreclosure sales. They're not really real sales. Here we have an article that talks about China's property bubble that might very well end in tears as well, and how a lot of buildings in China are basically built but don't seem to have anybody who is interested in actually moving into them. One of my favorite analysts as of late, David Rosenberg, is talking about some of the information that came out on Friday. This is the non-farm payrolls. Definitely not very pretty, even though everybody is saying that the labor market is recovering, but it doesn't look like it's anywhere close to recovering according to this chart. He's got some very interesting research here. This is the U6 unemployment rate, which nobody ever talks about. Everybody talks about the headline number of U4, which means how many people are on unemployment. This one tracks the people that are unemployed, that are underemployed, and that have simply given up looking for work, and that rate is 17.3%. That is enormous. It went up. Here is the length of time that people have been unemployed for. It has increased significantly. It's never been higher in the last 40 years. And I'm looking around myself, and I am putting this up against this particular chart here that says, the market says everything is dandy. Get back to work, get back to shopping, indebt yourself, everything will be fine. The two just don't add up, and when I'm faced with this, which can be driven by pure liquidity, and that which is in my mind reality, then I'm going to have to vote on that one, and I'm just going to have to sit out the insanity of the market for the time being. Hope you're doing well next week. All the best. I hope you make lots of money, maybe day trading or something. Long term I'm bearish, but there's always a few pennies one can pick up here or there. Good luck and goodbye.